Welcome back. Market's not going anywhere. It's a good time then to get in some investment ideas. Mohit Batra, founder and CEO of Market Mojo, now joins us on the show. Mohit, what have you made of this sideways move the markets have been in for a long time now, and what will get us out of this funk?
Well, I think there are chances that we may get out of this in the next couple of quarters, but I think there are very big concerns that are looming around the market. Market needs to and would be in the volatile zone looking at where the fundamentals are today. I think 2-3 factors that we're closely watching, international I'll talk about first and then maybe a couple of domestic factors, is the big stress on the small banks in the US. You saw the First Republic Bank down by around 50% yesterday. Deposit books are typically moving from the smaller banks to the bigger banks. That is one big concern. Number two is the commercial real estate market in the US is coming under stress. We know that close to $8 trillion worth of loans are coming for refinancing, and 80% of these loans are with the smaller banks. So I think one of the big crisis moments that we need to watch out for is the whole small banks in the US. The second factor, I think we keep talking about the Fed increases, which is, maybe another 25 basis point from here on and maybe stabilized and, then pause towards the end of the year. But the US debt ceiling of $31.4 trillion is being hit very soon. And I think we need to watch out of how the US markets will react to that. Domestically, I think one of the main factors that should be clear in the next month or two is the whole El Nino effect, whether it hits before the monsoons in India and what is the impact on monsoons out there. That is one big impact, and how we typically respond to the global market. So we personally feel that this is a very typical stocks up approach where, sectors rotation will be happening very fast, barring a couple of sectors where we have a very clear view. And investors should be looking at very high quality stocks and try and invest in those very cautiously at this point in time.
Mohit, you said you see this kind of sideways range continuing for a couple of quarters. Is that right? And I'm talking about this kind of range trade that we've been seeing going on. You expect it to extend for a couple of quarters from here?
That's right. I would say 1 to 2 quarters at maximum. We still are holding our target of Nifty at around 21,100. We still feel that we'll be able to do a good teen kind of a return this year. But I would say that the stress time in the market will sustain with volatility over the next 1 to 2 quarters.
Okay, well, that's saying it as you see it, Mohit. Hi. What will turn the scales, so to speak? I'm just trying to think, because we've been in a range right from the start of 2023, in fact longer, go back last year as well. So what could tip the scales? Could it be the start of the lower interest rate cycle, which is probably still a couple of months away? Let's leave out external factors. Let's leave out, US banks, etc., or whatever's happening in the West. In India, is it going to be some sort of blowout, unexpectedly good corporate earnings? Is it going to be a good monsoon? What could tip the scales, which gets the market out of its slumber?
See, I think one of the things that you've seen RBI very clearly in the last interest rate, they didn't hike the interest rates primarily because growth is getting affected. And I think the government is watching that very closely. We have elections next year. We have a strong impetus that will come on the growth now towards the next election. We've seen a large, capex on capital goods announced at around 10.5 lakh crores. So there is a lot of effort that is going by the government to try and get the growth back. So this was, I think, Fed pausing the interest rates is one event. Government of India focusing on growth is another event. And I think there will be, full escalator on the growth parameters in this particular year, which can do a big revival to the market. And if we have, decent to good kind of monsoons, and I think there would be a very big respite in the market. So as I said, the next quarter is very important because of the monsoon factor and because of, which way the Fed commentary goes. I think RBI has shown some kind of a resilience on the, it is a high inflation country. Predominantly, we don't have to mirror the US, barring the fact that we have to make sure the currency is in control and so on and so forth, but not at the cost of growth. This is a growth market. And if you were to look at this philosophy going forward, and I think that RBI will come out with strong comments on growth moving forward, which is clearly being reflected in the reforms as well. So I think...
So Mohit,
growth,
Mohit,
yeah.
Sorry to come in over there. Just going to a point that you highlighted, I mean, in terms of factors that can make the market sort of move. You said growth pushed by the government. Now, that's already happening. In fact, that's the only area of the market. I'm talking about all the order wins, whether it's railways or, CapEx. Look at some of the capital goods stocks or some of the industrial stocks like Siemens, ABB. That's the only pocket of the market that's done well. So what additional are you expecting from the government side? And how would you look to play it?
No, I think the one of the main factors is how fast do we or at all do we increase the interest rate. So if you have a decent monsoons, I think interest rate hikes will pause in the country. If you don't have, then we can go back to that interest rate high regime. I think growth factors of the government is in, but having said that, the reflection of that on the prices in the market is not happening. So, and predominantly this is, it's a situation where there is a whole amount of global factors that are coming into play in terms of sentiment of the market, and that is getting priced in. I think you talk about IT today, a lot of things that have happened on the IT sector has been priced in. You talk about pharma today, looks good. A lot of things are happening good out there. You're seeing a double-digit growth out there. We're seeing generic prices being stabilized out there. You see capital goods looks very good. So I think with the whole sentiment overall being a little more, muted on the negative side, as we've not seen over the last 1 year, most of the parameters are already fixed out there. They just have to reflect in the price.
All right, Mohit, thanks a lot for that. We're going to leave it there, and we hope to chat with you very soon once more. Thanks for taking us through your call in the market as well as some of these individual pockets. With that, it is time for another short break on the show. But when we come back, like we told you, we have some big earnings lined up today. Maruti Suzuki, Bajaj Finance will both be